Let's talk about crypto, a world of digital assets, blockchain technology, and decentralized finance. It's a landscape filled with innovation, excitement, and of course, risk. Crypto can feel like the digital lottery ticket that can make you rich overnight or leave you with absolutely nothing to show for it. The stakes are high and the outcomes can be incredibly varied. Meet Eric Finman, a name synonymous with early crypto success. Back when Bitcoin was just a blip on the radar, as a teen he bought Bitcoin at $12 a coin with a $1,000 gift from his grandmother. A bold move even then. By adulthood, thanks to the meteoric rise of Bitcoin, he was a millionaire. A true crypto success story. Now, meet James Howells, a name that echoes a very different side of the crypto story. He diligently mined thousands of Bitcoin early on, amassing a considerable digital fortune, but then accidentally threw away his hard drive containing the private keys. Today, that potential fortune, representing a significant amount of Bitcoin, is irretrievably buried in a landfill, a stark reminder of the risks involved. Two people, same asset, wildly different outcomes. One reaped the rewards, the other suffered a devastating loss. One's a legend, a symbol of crypto's potential, the other's a cautionary tale, a warning about the pitfalls. That's crypto, a high-stakes coin flip between the promise of a luxury mansion and the crushing weight of a mountain of regret. It's not just about picking the right coin or token, it's fundamentally about understanding and managing risk effectively. The potential for reward in the crypto market is undeniably huge, offering life-changing opportunities, but so is the potential for financial disaster if you're not careful. In crypto, a deep understanding of risk, coupled with careful planning and research, is what ultimately separates the winners from those who become cautionary tales. So, buckle up, because we're about to dive headfirst into the wild and often unpredictable world of crypto risk. Risk isn't complicated. It's a concept we encounter every single day, even if we don't realize it. At its core, it's just the chance things won't go your way. The possibility that an outcome might not be what you hoped for. It's that simple. Think of it like crossing the street, a very common everyday risk. You want coffee, that delicious caffeinated beverage that starts your day, but a bus could hit you. It's unlikely, but the possibility exists. You don't stay home, deprived of your precious coffee. You look both ways, assessing the risk. That's risk management. You're minimizing the potential for harm. In crypto, risk means your investment could skyrocket, achieve incredible gains and make you rich or crash and burn. Plummet to zero, leaving you with nothing. It could also mean losing your money to a scam, a cleverly disguised trap, a hack where your funds are stolen, or a vanished exchange taking your assets with it. Risk isn't inherently bad, it's the price of potential reward. It's the gateway to opportunity. If there was no risk, there'd be no profit. Just slow, steady, and ultimately unexciting growth. The big gains in crypto exist precisely because the risks are real and ever-present. The goal isn't to find a risk-free bet. That's a fool's errand, a mythical creature. It's to know what you're risking, to understand the potential downsides, and avoid obvious traps. Steer clear of the pitfalls that are easy to see coming. Don't be the person who gets caught in the mousetrap, lured in by the promise of easy gains. Understand the risks, weigh the potential rewards, and then, and only then, take the leap. Crypto risk isn't just one monster lurking in the shadows, it's a hydra, a mythical beast with many heads, each representing a different danger. Understanding these risks is paramount before diving into the world of digital assets. First, and perhaps most visibly, price volatility. Coins can soar to unimaginable heights or crash down to earth overnight, often driven by nothing more than hype, speculation, and raw emotion. This makes it incredibly difficult to predict market movements. Second, a constant threat. Scams and fraud. Rug pulls where developers abandon a project and run off with investors' money, phishing attempts to steal your private keys, and outright fake projects designed to do nothing but separate you from your funds are everywhere. Third, we have operational risk. What happens if you lose your wallet password or accidentally send coins to the wrong address? In most cases, that money's gone forever, irretrievable. Fourth, there's technology and platform risk. Exchanges, despite their best efforts, get hacked. Blockchain networks can experience failures, and software bugs can lead to funds being drained unexpectedly. Remember, you're often trusting new tech that's still being actively tested, with your hard-earned money on the line. In the world of crypto, you're essentially your own bank, your own security guard protecting your assets, and your own tech support resolving any issues. One simple mistake, and your entire fortune can vanish in an instant. The risks are very real, incredibly varied, and unfortunately, relentless. It's not just about the typical market swings and fluctuations that you might see in traditional investments. It's also about the potential for human error, the prevalence of sophisticated scams, and the ever-present possibility of technology failures. If you're not vigilant and careful, you could potentially lose everything you've invested in the blink of an eye. Therefore, it's crucial to know the hydra you're fighting, to understand each of its heads and the dangers they represent. Only then can you hope to survive the crypto landscape and potentially thrive in this exciting yet perilous new world. Why is predicting crypto so hard? Because its value is based on belief, not business fundamentals. Stocks have earnings and products, crypto has hype and sentiment. Markets swing wildly on emotion, greed and fear rule the day. External shocks, regulation, tech breakthroughs, or bugs can change everything overnight. No chart or algorithm can predict what a government or a viral tweet will do. Crypto is chaos. It's the stock market's hyperactive sibling. Financial models break down here. So when someone claims to know where Bitcoin's headed, remember, they're just guessing. In crypto, certainty is an illusion. Don't bet the farm on anyone's prediction. Crypto is risky, but you can dodge the worst disasters with a few smart moves. First, only invest what you can afford to lose. If losing it would ruin you, don't risk it. Second, do your own research. Don't buy just because an influencer says so. Read, learn, and question. Third, secure your assets. Use strong passwords, enable two-factor authentication, and store your seed phrase offline. For big amounts, use a hardware wallet. Fourth, diversify. Don't go all in on one coin or project. Crypto should be a small part of a balanced portfolio. If the market tanks, you want to survive, not sink. Don't chase hype. Protect yourself from scams and mistakes. A little caution goes a long way. In crypto, survival is victory. Play smart, not reckless. Risk is built into crypto, it's not going away. The big rewards exist because the risks are huge. Anyone promising a risk-free path is selling a fantasy. You can't eliminate risk, but you can manage it. Make informed choices, invest only what you can lose, and secure your assets. Diversify, do your homework, and respect the unknown. Crypto is like sailing. You can't control the sea, but you can steer your boat. Don't gamble, navigate. Build your life raft before the storm hits. You can't silence risk, but you can make sure it doesn't drown you.